Accounting cycle, closing entries.
So very quickly, let's take a look at closing entries. So we have so far completed our accounting cycle up until step 7, which is to prepare financial statements, and we've done that in our last video. Now we're going to look into the closing and prepare post-closing trial balance. This is actually, I would say, quite a simple sort of step, which already when you have all of the information that is needed, you just need to shift and close certain accounts. That's it. Now let's take a very close look at what closing entries are. Now, companies, the reason why we need closing entries is because when we prepare our accounts, yeah, I have to emphasize here, not, yeah, let me just write it here, not um, statements, yeah, financial statements, but yeah, but accounts, yeah, books, our books. We have to close some of the accounts because if we shift them to a new period, they will provide us with misleading information. And there are very few of those examples, but by examples, I mean only few of them get closed, which is revenue, expenses, and dividends accounts have to get closed. Because if you remember, the revenue, expense, and dividends, they provide an information from a specific point in time, let's say January 1 to yeah, let's say December 31. They provide that period of what you have earned in terms of revenue, what was the expense, and how much dividends were. So once this December 31 ends and we start a new period of, yeah, let's say this is 2021, and we're starting a new year in January 1, 2022, we obviously have zero revenue or zero expense because in this period the revenue or expense or dividends did not occur. So we have to close this account, bring those accounts to zero. So let's say that if we had in 2021 revenue count of, let's say, $14,000, yeah, this is the final balance, $14,000 you have earned up until December 31, 2022. Before you start new year, so this is 2021, before you start the revenue, yeah, you open an account in 2022, you need you need to zero it out. It has to be zero, and the only way to do so is to enter make a closing entry through the debit side of the revenue. And don't forget, if we have one debit side, we always have to have a credit side, and we're going to talk about that. But the logic, yeah, just for now, remember, understand the logic, and let me just record here that you have to close it. This has to be entered. This is a closing entry, yeah, closing entry, and this will be zero. That's it. Now, obviously, revenue, expense, and dividends are the accounts that have to get closed. And let me just show you just a second here. Yeah, so these revenue dividends, yeah, here they are. These are temporary or nominal accounts, but we also have real or permanent accounts which don't get closed, and those accounts are assets, liabilities, and equity because they are there regardless of the fact that the new year has started. The assets that you own are still in your account, in your stock, and so on. So let's look at it very briefly. Now, just to review what I've just said, why do we need to close revenue, expense, and dividends? These accounts affect retained earnings, yeah, so once the period is over, we need to adjust that. To assure the record in the proper period and then start over the following period, again, like I said, in 2021, we had certain revenue, expenses, and dividends, and now that we have shifted to a new period, it has to be zero. We didn't earn anything yet, so it has to be brought down to zero. Now, the cash account or liabilities account, they do not need to get closed. Only these accounts don't need to get closed. For example, the reason, so let's look at the exact example why. So let's say that your store has an inventory account, and inventory is an asset account, right? Asset account. The balance is $100,000. Now the store closes at 11:59 p.m. on January 31, 2019. And when it opens on February 1, the next month, the inventory account balance will still be $100,000. So it's the same. So the asset is still there. I don't need to remove it. I don't need to bring it down to zero, because it's, if you remember the balance sheet, which is the asset is the element of the balance sheet. Balance sheet. It is the statement that provides in specific, so financial information in a specific moment in time. Whereas the elements of income statement, revenue, expenses, and so on, income statement is financial information that covers the period of time from point A to point B. By point I mean the time. So let's say day one, and this is well, day one doesn't sound correct, so let's go with exact date of January 1, and in our specific example it has to end with January 31, and the next month will be February 1. So we have to only show income statement elements for one period, not moment in time, period in time. Now let's look next. This is a different example. Let's look at this. It is the end of the year, December 31, 2018. You see that you have earned, and earning is what? Revenue. $120,000 this year, and you had an expenses, various types of expenses, electricity, cable, internet, gas, maybe food, and so on, and rent. These all expenses summed up to be 70,000. Now the next day, it is January 1, 2019. So our, let's say, fiscal year has ended. Fiscal year is covering period of 1st January to 31st of December, so end of the year sort of one, and we're starting a new period in January 2019. So what are our total expenses, and for rent, electricity, cable, internet, gas, and food for this current year? And by current year I mean 2019. Obviously it's zero, because nothing has happened. Everything that has happened, these 120,000 and 70,000, they cover 2018, not 2019. So our expenses and revenues for 2019 is zero. I mean, nothing has happened. On the other hand, assets, liabilities are still present and exist. That's why we do not close those accounts. Like I said, these assets, liabilities, and equity, they are called real accounts, whereas other accounts, the ones that include into the income statement, so revenue, expenses, dividends, and then we'll talk about in more details about the income summary account, they are temporary accounts or nominal accounts. They have to get closed. Now let's look at them. The slides are all available, so make sure to look at those. This is the proper sort of steps to close entries. So once you have completed, now you have your trial balance, adjusted trial balance, using which you have built your financial statements, right? Now, given that information you have, obviously there you will have let's say a revenue account, you have cash account, I don't know, you have payables account, I will just payables account, receivables, and so on, also expenses, and so on. Now you need to close specific accounts, which is revenues, expenses, and dividends. You also have to close. What you will do, whatever amount is in the revenue, you will enter exactly the same amount its opposite side, yeah, so the debit side. So normally this is our revenue. The balance is on the credit side because revenue increases through the credit side. Now we have to make a closing entry, and that will be, let me show it here, 14,000 to a debit side. Now it's 0, but where do we put it on a credit side? The credit side will be the account called income summary, yeah, account. And here, obviously, because we entered revenue to the debit side, now the opposing entry will be on the credit side, 14,000. That's it. We have closed our revenue. It's down to 0. The second step, yeah, so this was the first step. Now the second step is to close expenses to the income summary. And let's say expenses were, like we saw previously, I don't remember, but let's say 7,000. And expenses are usually, yeah, expense account. Well, we normally have multiple entries, and they are all increased on the debit side, if you remember correctly. So let's say the total expenses were 7,000. This is our original balance, yeah? This is balance. Now, to close this account, I will enter it to the credit side. 7,000 will be entered to the credit side, and the opposing entry will be to the income statement, income summary, and that will be 7,000 to our debit side to the income summary. Again, the expense account is down to 0. There's nothing left. Now, income summary gets balanced out, and 14,000 minus 7,000, we have 7,000 of net income. But yet again, the fourth step is to close the income summary account to a retained earnings account. And retained earnings, depending on our operations, might have some kind of original balance or might have 0 balance. Yeah, let's say beginning balance is 0. Beginning balance is 0. And now we have these 7,000 in the income summary. Again, I need to close this income summary. To close this one, I will enter it to the credit side, debit side. This is a closing entry. I can actually show CL everywhere so that you know that this is a closing entry. Yeah, so I make a closing entry, and now this is 0. But since I've entered to the credit side, yeah, closing entry to the credit side, now the debit side will move to our retained earnings. That's it. This is our, oh, sorry, oh, no, since I entered the information. So this is the debit side, yeah, so 7,000 will go to the credit side here in the retained earnings. So by now, we have successfully managed to close all 3 closing entries. We also have one last step to go through, which is the fourth one, and that is closing dividend account, which is also a temporary account, to our retained earnings. And dividend account is usually on the debit side balance. Now to close this one, make it 0, I need to enter to the credit side a 400, yeah, closing entry to the credit, $400, and the debit side will go to retained earnings. Again, this is a closing entry, and now I have my final, so 0 plus 7,000, 7,000 minus 400, that's going to be 6,600 is my final retained earnings for that year. And this, yeah, so again, cross on the dividends because that one also closes out. Expenses also balance out, and that's also closed. So the next period, dividends, revenue, expense, and income summary will have a 0 balance. Whereas retained earnings is not. This is a real or permanent account which doesn't get closed, and so our next period in 2000, so let's say that this is 2021, and our new period retained earning 2022, let's say January 1, our beginning balance will be 6,600 beginning balance for retained earnings. That's it. This is how we do our closing entries. Now, obviously, this is only theoretical explanation. Again, I strongly advise to look into the slides that provide even more details and explanation. And now we will switch to Excel workbook, where I will explain in details on our previous exercise how to do those closing entries there. Okay, so let's go to our example on Excel workbook, where we in the file, well, not file, the worksheet 2 trial balance, second trial balance, we completed all our this example. If you will take a close look, if you remember that one, and the final step we did adjusting trial balance, and using the adjusted trial balance, we'll build these financial statements. Now the closing entries are using this trial balance. We have to prepare these trial balance. We have to prepare our accounts for the next financial year, fiscal year. Now these are the steps to close the accounts. Just a reminder to you. So when you watch the video, it will be much easier for you to do. So I'll ask you to give it a go. Do it by yourselves using the previous information that I've given you. Try to do it by yourself. Yeah, so you already have all of your accounts on the top here in a T account shape, and you have revenue accounts, yes, service revenue account here. You know the balances, you know what you're supposed to do. Here is your hint sort of list, 4 steps, and then unpause and we will do it together. Okay, now I hope you have already done it, or at least given it a shot. It's okay if you are not sure if it's correct or you're still confused. We will do it together and you will know what is what. Now, the very first step says, please close revenue accounts to the income summary. Now, the revenue account, we can watch it here as well. Yeah, so this is our revenue account. Let me just change the color to a light blue so you can see it. Now, service revenue is 7,900, and as you remember, it's a credit entry, a credit balance. And if we go back to our T account, you can see as well that this is it is credit side balance, or normal balance is on the credit side. Now we have to close it. It says close revenue accounts to income summary account. Now we don't have an income summary yet. So all I have to do is create one. I'll just use a template, and here is and clean this one, and this is going to be our income summary account, and I will enter all of this information in here. And let me just make sure that you're not confused. Income summary is going to be normal color. So remember, red entries were the adjusting entries. Now we're going to just go with the same sort of format, color coding format. Now, all we have to do, the very first step, is enter 7,900 and make sure that 7,900 minus 7,900 on the debit side, it equals to and balances out to 0. Yeah, 0 balance is here. I can actually even do with using a formula. This minus this is 0. So that's it. We have basically balanced our service revenue to 0. But we entered our debit side only, right? If you remember, this is a double bookkeeping. We have to now enter the credit side. Now the credit side, as we know it, has to be in the income summary, 7,900. Again, I'll make sure the colors are all matching, except I can do this color coding to let you know that these are the closing entries. Again, service revenue is the first step. We have finished it. Now, the second step is to close all of the expense accounts to the income summary account as well. Unlike our service revenue, we have several expense accounts, and that is maintenance expense, salary expense, dividend, well, dividend we will leave at the end, depreciation expense, insurance expense, and the supplies expense. So one by one, I will be entering them both to their respective. So whatever expense account, so I can do is just look at the expense accounts here, just to make my life a bit easier. 2,400 entered here. Again, I don't have to balance it out. I just hope that it's kind of understandable. 290 I enter here, so this will be zeroed out. Yeah, so this is 0 because this is the balance, 0 balance. Next, expense, dividend, depreciation expense the same way, 180. And this balances out to 0. Insurance expense, 150, and this is also 0. And supplies expense is 590, and also the balance is 0. Now, again, let me just color code it. We did all of our expenses expense here, expense here, expense here, and expense here, and color coding shows this. Again, because all of the expenses are normally a debit side entry, and we, to be able to close this account, enter to the credit side, we have to enter into the income summary a debit side entry. So all of those, one by one, will be entered to the income summary account debit side. I hope it's very easy for you to understand the logic, why it is debit or why it is credit. Again, I'll just work out with the formatting because it's really interesting to see it. And now I can balance it out. So the balance on the income summary will be 7,900 minus all of this accounts, all of the debit side. Yeah, so 4,300 is my balance for the income summary. Now don't forget that the income summary is also a temporary account, and the third step says close the income summary account to the retained earnings. Retained earnings, because our example of the company was I think it was the first year of operation or first months of the operation. There is no prior retained earnings account. So again, I'll just create one. I don't have a better template, but let's take this one because it doesn't have any other colors. So this will be our retained, or RE, retained earnings. Please stick to this sort of form, abbreviation. Now, retained earnings original, again, I can write it here. So the beginning, and just code it, beginning is 0. Beginning balance, yeah, is 0 because this is the beginning. This is the start of the operations. Yeah, they opened the company on this specific day, so there was no operations from before. So the retained earnings, which is a real account. Yeah, let me just write here as a comment that this is a real account or a permanent account. Yeah, so that just you understand it. And now we just close this income summary to the retained earnings. Again, to close this account, because this is a credit balance, I will enter it to the debit side. 4,300, and again, yeah, so the final balance is 0. Yeah, the final balance is 0. 4,300, which was entered to the debit side, now has to be entered to the credit side, 4,300. And yeah, the third step is done. Income summary also closed. This is the let me just color code it. I like, as you know, color coding. This is very useful. Sorry. These are all temporary accounts that have been closed, including our income summary. Closed. But retained earnings is a permanent account. It doesn't get closed. Finally, we have a dividend account that also has to get closed down. It has to be zeroed out. I enter it to the credit side, and the opposite entry will be debit to the retained earnings. And that's it. This is basically our closing entries. We have completed it. All we have to, left to do is to plus this. Yeah, because it's 0, it doesn't matter, but still, I just want you to understand that carefully. Our final retained earnings for the year is 3,700. We can actually check that. If you see for 3,700, our retained in our account is equal to our retained earnings in the statement of owner's equity or retained earnings statement, and our net income 4,300 is exactly the same as in the income summary balance. So as you can see, this is very simple, this is very easy. As long as you have correctly prepared your adjusted trial balance, you've made the correct entries, you will be having no trouble to close your accounts and prepare them for the next year. Now, using this one, the final step probably we should do is to prepare post-closing trial balance. And post-closing trial balance is super easy because we've already closed all of these accounts. Yeah, so salary expense, maintenance expense, let me see, depreciation, dividend is closed down, insurance expense, supplies expense, and service revenue. They are all closed accounts. We've closed them in our previous step. All we have to do is to add retained earnings. Yeah, so let me just take this because I'm super lazy to redo it all together. So all I have to do is clean up this one. Yeah, remove this. Well, I can simply just clear the content. That's also one of the possibilities, which will save me time in, you know, readjusting all of this table and so on, and just add the retained earnings. Yeah, the only one that we didn't have, now we do. And that is 3,700 on the credit side, so 300 on the credit side. And of course, my formula is not correct. Okay. Ah, what happened? Oh, okay. Clear and do the formula all over again. Yep, that's it. As you can see, it all balances out. Now it's not adjusted, but post-closing trial balance. And so that's it. And for the prettiness of it, you obviously can just delete all of these unnecessary or empty cells. Yeah, so very easy to do. Just remove them. And again, you have very neat, very correct post-closing trial balance. And again, just for the sake of understanding it, there is no income summary because it's a temporary account. There is no revenue, there is no expense, and your new so using this post-closing trial balance, you will start your new period in which all temporary accounts have been closed and sort of added and summarized and closed into the retained earnings, which you already have here, and you'll have very neat and beautiful post-closing trial balance. That's it. Just so you don't get confused, I'm really sorry that I didn't notice it earlier, but I left the balance on the previous one here, and it might get confusing. You might think that this is one of those revenues earned, but please remove that because otherwise it will make no sense. So I'll just recorrect my entries, right? So well, formula and minus the debit side, and again this is 0, just so you don't get confused. Yeah, 7,900 was a previous balance. I just left it by accident. That's it.